Hello and welcome to the Money Compass.
In each episode, we will be preparing you for your journey through the world of finance and helping you tick off the destinations on your financial itinerary.
Pack your bags and prepare for takeoff as you navigate your way to financial success.
So this morning I'm joined by Louisa Bradberry, who is a senior associate at Ashton's Legal. Very nice to have you here today.
Hello. Hi. Nice to be here.
Thank you very much. So Louisa's here today and we're going to talk a little bit about the Bank of Mum and Dad, which is in Julie's book, The Money Compass. On page 58, if you want to find that chapter and have a read. And there's lots of stories in there, but I'm sure Louisa is going to help us today and tell us a few stories about bits and pieces that she's experienced, some wills and probate information, hopefully, as well. Do you want to start, Louisa, and tell us a little bit about who you are and what it is you do?
Well, as you've said, I'm a senior associate at Ashton's Legal. I'm currently based in the Norwich office, although we do have quite a mobile policy, so I can work in any of our offices. I'm quite often seen in Diss and sometimes in Bury St Edmunds as well, and I live quite centrally to all three, so very easy for me to get to all of them. We've also got offices in Cambridge and Ipswich and Leeds. Haven't yet been to the Leeds office though.
It's not exactly just popping around the corner, is it?
Yeah, it's a niche office for French law, so that's one of our extra little things that Ashton's can give that many firms can't. We have a French law team.
Well, I've learned something new already.
Absolutely, yes. So if you've got any clients with, French, or anybody listening has got any French legal requirements, they should get in contact because not very many firms in the country do it. So this is a really good department as well.
Fantastic.
I have been a solicitor since 2005, so I've been qualified for nearly 18 years, or is it 17? My maths isn't very good. And I've mainly specialised in private client law, lifetime planning, as we call it at Ashton's, which is wills, probate, tax and trusts. And currently I head up the Norwich Department of Private Client Team, or lifetime planning. And I do a lot of probate work, a lot of will drafting and advising on trusts as well. So
a little bit of everything.
A little bit of everything, but sort of all within the same area. So I tend to do more tax and trusts than, say, vulnerable client law, which is about sort of Care Act and things like that. So there's two routes you can take with private client law, and I think you tend to find people sit one side of a fence or the other. So I've gone the slightly darker route of tax. Nobody really wants to do that, but
no.
we all need to know. We all need to know about it.
Definitely, and if we don't know it ourselves, we need an expert that does. So
quite well, as we were always told, you can't avoid death and taxes. So certainly the right environment to be in for that. Most definitely.
So what led you to be a solicitor? What made you take that path? That was a little chuckle. Was that an accident or?
No. It surprisingly wasn't an accident. When I was quite young, my dad gave me some very salient career advice, which is be a lawyer, an accountant or an undertaker, because all three of them stay employed regardless of the, economic circumstances.
It'll always be work for you, definitely.
Always be work. The irony is I don't particularly like maths. And if my maths teacher happened to be listening to this, he would probably laugh his head off that I've done anything to do with maths. So I've sort of taken a little bit of everything and merged that into probate law. So yes, it's kind of, it wasn't, when I was 18, I had a very different idea about I wanted to go off and run a bar in Portugal.
Slightly different.
Yeah, there's a story behind that, but probably not one for the listeners.
Is that still a retirement goal then?
No.
To retire to the sun and no?
No. My parents actually live in Portugal, so I do get to go there.
Very nice.
Not for me. But then I took 3 years out at 18, saw a little bit of the world, earned some money, worked in a very strange industry, which is quite known but small, and then over a conversation in a pub ended up deciding that I really should go back and get that law degree, and did. So I went back to university at 21. So
fantastic.
There we go. Many years later, here I am.
It's not that long, don't you worry. So when you went back to law school to become a solicitor, did you go with the intention of this is the area that you wanted to specialise in, or?
No, not at all. Like everybody, I watched all the legal programmes. I mean, I'm a teenager of the 90s, so for any listeners that will remember the show This Life, which was based around young, newly qualified or trainee solicitors and barristers, that was kind of probably the pre-18 reason why I wanted to be a lawyer. Mm-hmm. But no, I didn't. You always see the glamorous corner office, everybody kind of having a lovely party atmosphere and not doing a lot of work. And I would say that actually the reality of it is there's a lot of work to get there, and it is a constant job. It's not one you can just
pick up and have a few days and disappear. And
I think it stays with you. So whether you're at work or not, you're, in the back of your mind, you're thinking about things. So you have to expect that in a career in law. You can't just think, oh, at 5 o'clock, the clock start, the work clock time tools down. You'll wake up and think about things, and you'll suddenly be in the middle of Tesco's or Sainsbury's and go, I needed to do that. So it's a career, and I think it is a passion. I didn't choose to do private client instantly. I was very interested in it after I did when I did my degree. The degree is very academic. Not much of what you learn on your degree actually transfers forward to the work you do as a practicing solicitor, maybe more as a barrister, because you're more reliant on cases and statute, but certainly not for the area I've gone into. I did enjoy private client when I studied at law school, which again is ironic because it's very maths based and it was very focused on the tax. But I did, when I embarked on the sort of the law school route, or the law degree and then subsequently law school, I did want to do a real type of law, something that involved real people. And I used to joke when I first qualified, I did conveyancing, and I always used to get questions about divorce, in the pub. You're a lawyer, aren't you? Do you do divorce? No, I don't. I don't know anything about it. I've never done any kind of family seat or anything like that. And now I get, do you sell houses? So it's
I think it's one of those, such a broad area that people just assume that you must do it because you're a solicitor. That's what solicitors do. They don't realise the details behind it. It's interesting how you say about how it's a career and you never just go home at 5 o'clock. When I was introduced to being a financial advisor, I was always told it's not a job, it's not a career, it's a lifestyle, because it will be with you wherever you go. You will go on holiday and something will pop into your head. You'll need to do something. If a client calls and they want you, you need to be there to be able to deal with whatever it may be. So it sounds like it's a very similar.
Very much so, yes. And what I always find really amusing, and my husband finds more amusing than I do, is that I will get a message on Facebook out of the blue from somebody I haven't seen for the best part of 15 years saying, so you're a legal eagle, can I just pick your brain about usually something completely unrelated to what I do? It will be about a boundary dispute or divorce, still divorce. People like to ask you about divorce. So it is useful, but I think the good thing is, and certainly working for a firm that has many separate areas and teams.
Departments,
I've always got a person I can refer to. I've been asked about franchising law, which again is quite, unique. And Ashton's has a big franchising team. I've been asked about disputes, this person died and I want to challenge their will, which is probably something that will come up as a course of this conversation. But and also always divorce, employment. I've been given a settlement agreement. What do I do with it? So I've got colleagues that I can refer them to. So I always welcome them. And I always get I'll buy you a drink when I next see you, which is going to probably be in 15 years. So there's...
if it's taken 15 years for them to reach out and contact you with a message, it's going to be a while for the drink, but never mind.
I think people do. They scroll through their Facebook friends and go, right, do I know anybody with this? But it's the same thing. I will ask my friends who are plumbers, I've had this quote. Does this sound right? And we all do it.
Exactly. You want to know that it's someone that you can trust and someone that you can rely on. And when it's a referral from someone that you know of, you always feel more confident than just searching on Google.
Yes, I'd rather they asked me who I recommend rather than they searched on Google and just found somebody.
Any old person.
There is getting decent professional advice is always the way forward. The same with financial planning, I'm sure.
Most definitely. So, as I mentioned earlier, today we're looking at the bank of mum and dad and wills, and basically about how reliant children or younger people may be on older people now. So, an example of this I can give you is my colleagues, obviously quite a bit older than me. They've been in financial services for kind of 30 years. And in recent years, the last 2 or 3 years, we've been to see people and they've said, we're going to gift some money to our children to help them with a deposit for our house. And my colleague Ralph, that I spend a lot of time with, he gets quite irate about it. He says, why are you giving them any money? When you were younger, nobody helped you, blah, blah, blah. So all the kind of normal stories that you would expect. And he gets really annoyed about it. And it wasn't until I went to look to buy a house and obviously shared some of the information with him of, this is the deposit I need. And actually, I'm not earning quite enough. I need to be earning more to be able to afford to do it on my own. And he went, oh, that's why people are giving their children money, because they can't afford it. So that's why it's good to speak to you today, just to kind of get your viewpoint on it as well, about how you've seen things change in recent years of gifts to people in lifetime, and how wills maybe differ now to how they might have done previously, and the importance of it all, really.
Yeah.
So would you say, as you write wills, deal with probate and things all the time, would you say there's been a change in the trend of what you've seen? Or
I would say that there are a large percentage of parents, particularly, and sometimes grandparents, sometimes aunts and uncles, but more commonly parents, who are interested in their children sort of having their inheritance early, being able to use it so they can actually see their children benefit from it. There's always several reasons behind that. I think, I don't think it is just purely, I love my child so much, I want them to benefit. I think there is they think that they can mitigate inheritance tax, possibly avoid all their hard-earned money and assets being used to pay for care home fees. That sort of thing as well sits alongside it. Put it like this, I think it's a case of, if you wanted to give £50,000, would you rather give it to your child or to HMRC? And not many people, in my experience, would like to see the taxman benefit from
I don't think
that.
anyone would be up there and saying, yeah, give it to HMRC, but...
One of my colleagues did draft a will where somebody did leave money to HMRC, and no, I'm not joking, it is genuine. It's somebody I currently work with, and it wasn't while we were at this firm. We worked at a previous firm together, and yes, a beneficiary of a will she drafted was HMRC.
I have definitely heard it all now.
Yeah, it's not my story, which is really annoying, but I have no idea, and I cannot remember the reason why this person chose to leave it to the taxman. But what I always wanted to know is, they're not a charity, so would they be taxed?
That's a very good question.
That would be that was what I always wanted to know.
I would imagine so. But
I
then,
would think so. Well, they're not a spouse and they're not a charity.
no.
It's amazing if they charge themselves inheritance tax.
Oh, I'd love that. I would love that to happen.
I might find out. I might do some research and find it out, or just ask her if she ever found out. Be easier. So yes, definitely parents do want to help their children, and I think everything costs more these days, not just in the last few months with the rising heating costs, energy costs, fuel costs, all of the everyday rising. But if I use myself as an example, when my parents bought the house that I grew up in, they paid £30,000 for that, or around £30,000. They probably, it wasn't their first house. They may have had, some equity. I think the first house they bought, which was on the outskirts of Norwich, was £1,000 in the 60s. So in the 70s, the fact that the house prices had gone up to sort of £30,000, still in East Anglia, but now you're looking at, first or second houses could easily be in the region of £300,000. And I sort of think, I remember comparing it, having a conversation, shall we say, with my parents about whether they could lend me any money to buy a house, or, be the bank of mum and dad, to which they said no. I came out of university and law school as much in debt as the cost of their first house. So if I then apply that to my children, my first mortgage was about £200,000. Are my children going to be £200,000 in debt from university and a postgraduate, course? So I can see why people want to stop their children getting into that form of debt. And also because the value of house prices, or the value of property, has not increased in the same level that the average earning potential can do. So if, particularly after the subprime mortgage crash in 2007, 2008, people used to get over and above mortgages. They can't get those anymore. But, I don't know off the top of my head what the average earnings are, but let's just say it's £30,000 is average wage for the country. You multiply that by 4, that's only £120,000. And I don't know anywhere in East Anglia where you could get a house for £120,000. Not for a family. You might be able to get a very small flat or a very small house somewhere probably that nobody wants to live. I would think the average house prices in this area are around, over 220,000, something like that.
There was actually something on the radio the other day for the east of England, excluding Cambridge and Essex. I think the average house for a first-time purchase was £246,000. And it's just unbelievable, isn't it?
But people have to be earning £50,000 a year, and that, despite what, a lot of people will think, that is not
average.
Not average at all. That is not average at all. Certainly not in your mid-20s post-degree. Certain professions and certain jobs, yes, people will be able to, or they'll be entrepreneurs, but absolutely, that's not normal.
And I think it is now designed that two people need to buy together to have the earning capability to be able to do it if anybody's looking on their own.
Absolutely. And that comes with all its own problems, particularly if you're buying with a non-married partner or non-spouse. You can have real difficulties with that if you're borrowing money from mum and dad, because they might not feel so inclined to lend it to your boyfriend, girlfriend, significant other as they do to give or to loan it to you as their child.
It's a very interesting thing you say that, because I actually went to the bank of mum and dad when I looked to buy my first house, and the bank of mum and dad said, yes, we will help you, but there was a condition of, we are not giving you this money, we're loaning it to you. For that exact reason, my partner at the time, which they obviously did the right thing because it was my partner at the time, not anymore.
Uh-huh. Yep.
Their money was protected to make sure that they got it back. And I think it is a risk of doing things in your lifetime and giving money as a gift that you no longer have the control over it. So doing things as a loan to help other people out is a good way to do it, because you still retain the control over it and can have it back at a later date.
Absolutely. There can be tax implications for loaning money depending on the terms of the agreement and situations like that. And obviously from a protection and a control point of view, it is an option that parents can take, because it does mean that they get the money back. They haven't lost it if the child's relationship breaks down or even the child goes bankrupt, something like that. It's not a gift. So it is still within their control. The interesting thing is that people nowadays will more happily commit to a 30-year mortgage than they will to commit to getting married or forming a civil partnership. I don't know what that says about society or whether that's a good or bad thing. It's it's each to their own is kind of my view, but that is the very real risk, is that when you borrow money from a parent or from any other source, and then you're in a relationship and it breaks down, for the parent to be protected, planning needs to go into it. There needs to be some thought, and it's not just a case of, oh, I've got this £40,000, I inherited it from my parents, so I'm going to just give it to you, and it'll all be hunky-dory and everybody will be happy and it'll be moonbeams and flowers all the time. Life isn't like that. Life's really complicated, and relationships can be 25 years long and still break down. And then if there's there's any element of this, the parents as the giftors or the loaners can feel quite upset. That you would like to think, wouldn't you, in that situation, that I would like to think that if my mum and dad had given me some money, if I'd bought a house with my husband before he was my husband, that my husband certainly wouldn't want to walk away with that money, because he's a decent, fine, upstanding human. However, I do know of situations, not my own personal ones, but of friends' situations where exactly that happened. Mum and dad inherited money, gave to an only child as a deposit, and long-term partner. A few years later, long-term partner said, not interested anymore. And, oh, well, it was gifted to me as well.
We'll be having half of that.
Absolutely, and they did. Everybody was angry. Nobody. And there was a little part of me that went, could ask me.
Just that little Facebook message,
Just, yeah. So yes, it can be, and to be quite honest, I've seen many of those situations.
And I think it's, when money is involved, you always think that things will be amicable and we can sort this out nicely. The same as when somebody dies and there's a will in place, the arguments that there can be, I'm sure you've experienced that many of times.
Once or twice.
The arguments there can be over the silliest little things. Someone was actually telling me the other day that there was an argument and a dispute and it ended up going to court and all sorts of things because somebody wanted a set of shears, garden shears, and they couldn't settle it between themselves. And I just think, why? What are people like? But who knows?
I think that the mix of grief, death, guilt, and money is a horrible one. And I my colleagues hear me say this a lot, but I think that that is the perfect storm. And I think it's where parents need to be very, very careful when they're drafting their wills or gifting money to one child because one child needs it more, how badly that can
affect relationships afterwards.
Absolutely, on death. I think people quite often talk about, oh, I didn't know, it wasn't, nobody told me. There is no automatic right to inheritance in this country. Just because you've got children, it doesn't mean that you have to leave your money to them. So you can choose to leave it all to the cat's home if you really want to. And, there are certain avenues that your children can go down to say that is not right, but they are limited. And the situation with, not treating your children equally is one of those which can really cause massive aggravation and upset and hurt feelings. And I think that although I don't deal with contentious probate, which is where somebody contests a will, I think that a lot of people that come in, and want advice about that is because it's the principle. Well, it isn't fair. It's the principle. I didn't do that. It's not, I didn't get this. And I think, I've experienced that again in people that I know personally, not just in clients. And it does feel very personal. And that's why when I see clients and they're doing their wills and they want to potentially not benefit one child as much as the other, I ask why. And if there is a really good reason for that, we look at how we can maybe call it into account in the will, so that actually when all is said and done and the estate is distributed, there is equality. But not all parents want to do that. Some have one child that is hugely, self-reliant, successful, and they may have another child that for very many reasons, whether it's health or other issues, that aren't able to provide for themselves quite as well as child A, shall we say. Mm-hmm. So there are reasons why parents do want to do it, unequally. But again, the key to everything is getting really good advice about it. Is not just going, I can write this on a piece of paper, so this is how it works. You don't know what you don't know, and that can be quite dangerous. And I think sometimes with, also with where people are getting advice from non-specialists, or non-regulated. And when I say regulated, I mean by the Solicitors Regulation Authority, like most solicitors, reputable solicitors firms are. There are institutions that will writers can belong to, which are, there will be very many of those people that know a lot about what they're doing, but there will also be people who start a business and go, oh, that's great, I can pay a subscription fee once a year, get a stamp, and because I can write it down and it makes sense on a piece of paper, when you then actually look at that post-death and you see those wills and you think, why would anybody have ever written this? This is really hard, even if it seems simple. So, yeah, the key is getting some balanced advice that doesn't just look at what you want to do, but looks at the sort of 360 degrees of the advice all around it, because there are certain pitfalls that you can drop into quite easily where people only know about writing a will rather than actually dealing with the estate on the other side.
Yeah. So if somebody were to come to you and they want to do something a bit controversial and maybe leave one person out or whatever it may be, is there anything specific that you would say to them that they need to do to kind of make it more watertight, other than obviously the legal part of the will and you looking at it all the way around? Is there anything you would specifically say to them that they need to do as well? Or
I think what a lot of people don't understand is that there are certain categories of people that can make a claim against your estate on death if they are not left reasonable financial provision under your will. So that comes from the Inheritance Provision for Family Independence Act 1975, and there are certain categories of people that can bring a claim for reasonable financial provision. And very broadly, those are a spouse, funnily enough, and children, somebody who's treated as a child, somebody who's been financially dependent on you, and in some cases an ex-spouse. So the level of financial provision that I suppose the court would deem reasonable is you can't sit in a meeting with somebody and say, this is what the court will say. If anybody does contest a will or make an Inheritance Act claim, the matter would proceed on its own facts. So it would be looked at, who have you left? Who else is left? Who are you disadvantaging by doing that? So there's, over the course of the last 10 years, there's been a long-running case where a mother did exactly that. She decided not to leave anything to her child or she left I can't remember the facts of it now, but she left a small amount, and the child said, well, hey, this isn't fair. And it did make people a bit worried, because the findings in that case were actually found in favour of the child. But I think that was quite unusual. A spouse is obviously going to have a higher level of reasonable financial provision than a child. And in fact, there is a different standard for a spouse that claims rather than a child. So I think if you're trying to cut a child out, I would always ask what the reason is. Is it because my child's really, really super rich, they're a millionaire and they don't need the money? Okay, so put that in your letter of wishes and say, dear Bob, I didn't leave you anything, because actually you've got more than enough and it's not going to make any difference. Or is it because you don't see them? Is there a reason that you don't see them? And also what people have to anticipate is that sometimes after making their will, where they've cut, Jim out of their will, they will suddenly reform their relationship with Jim, and then they die before they can change their will. So there are situations where you can write a letter of wishes that goes alongside your will, that basically says why you've made this decision. But there is nothing you can specifically put in a will that says, I don't leave anything to this child, and that eradicates their ability to be able to bring a claim. So it's a statutory claim. Whether they choose to bring it is a completely different thing. And
I think for some people it would be, well, they can't afford to make a claim, or they think, oh, it's not worth the hassle, or whatever it may be. So it wouldn't necessarily go anywhere, but they obviously still have the option. Absolutely.
And although, the cases, if they go fully to court, can cost tens, if not hundreds of thousands of pounds. So obviously as a claimant, you have to be very sure that A, you've got a strong case, and B, that there's enough money in the estate to actually fund what's going on, because the executors will be able to take, costs from the estate in most cases, because particularly if they're not beneficiaries of the estate, they shouldn't be out of pocket. So yes, I think, to go back to the question, it's a case of understanding from a client point of view, understanding why they want to cut that person out, and explaining to them that it might not be absolute, and it will depend on what that person does as a result. But I certainly think if it's a case of where you've said, your child is adequately provided for, or talk to them and say, look, I've left this all to your sister because you don't need it. I don't want you to feel, and you can also make sure that you leave them maybe personal items, that so they've got something, because I think as a disappointed beneficiary, there's nobody you can ask. You can't say to your mum, if she's just died, why did you do this? So I always encourage my clients to write a letter of wishes, and I don't have to read it. It can be very personal. I know some solicitors will write quite a standard sort of, I have taken consideration and I refuse, I don't want to give this person any money under my will. But from my point of view, because that letter could be evidence to the courts,
and it's much nicer to be in their own words and their own personal reasons. And I do think as well that a lot of people think what's in their will is a secret and nobody's allowed to know anything about it until they're gone. But I actually think it's much better if they're quite open about it. Obviously, some things they might choose that they don't want to tell someone. I completely understand. But when it's something that could upset people, I don't think anybody wants to die particularly knowing that they're causing a problem. Most people are making a will to kind of tidy things up and make things easier for people. The last thing they'd want to do is make things worse. So
yeah, I would agree. I think it is a little bit of a dirty word, almost, talking about money, inheritance, and people, it's not a dining room conversation. People don't want to do it. I try to encourage clients to not be like that and to talk about it, because I think if they do something controversial and they tell their child they've done something controversial and the child kicks off, at that point, they can still do something to sort it out. They can still, the child could plead their case and say, oh, this isn't fair, and you gave my sister this or my brother this or whoever. But once you're gone, they can't do that, and they have no ability to ask the questions that they would have done had you told them during your lifetime. So I think it's communication and being open, but like you say, the majority of people are not very confrontational and they don't want to have those conversations. And I always try and elicit that from a client and say, are you concerned about what they'll say? And I have had clients that say, I just want them to be happy when I'm gone. And it's like, well, I don't really think what you're doing is going to make them happy, and I can foresee how this is going to work as as a probate. So it's hard. I mean, you can't make somebody leave a gift under their will that they don't want to, leave. But I can only advise as to...
And point out what the problems could be.
Exactly. It's very difficult and it's very emotional, and every situation will be very, very different. And you do find that people do not necessarily inherit what they were expecting, or they're sharing their inheritance with their children, for example, that they weren't necessarily expecting to do so. And particularly if they were counting on that money to pay off a mortgage, or just, not have a pension, because they're like, oh, mum and dad are going to die, that'll leave me with several £100s, I can just save that to provide for myself later on. It's a massive boiling pot of emotion, and it's very difficult. And as the solicitor sitting in the middle of that, you have to, if you've done the will, you will know the reasons behind it, and you can share those with the beneficiaries if they haven't been shared during the lifetime, if there's a letter of wishes that sits alongside the will. Unfortunately, human nature is we don't deal with disappointment very well, whatever level it is, whatever age you are. If you've been looking forward to something, obviously not the death of a parent, but thinking that, this will happen.
I'll be set up for
life.
life.
Counted on it. I mean, I always try and tell people that you shouldn't count on having any inheritance, and certainly not with rising care costs and things like that. There is a chance that there's not going to be as much left. But I think in the last 2 or 3 decades, with house prices being so, people are inheriting more than they maybe anticipated, and also the generation of people who are dying, I suppose, were more private about their financial affairs. So I would say we get quite a lot of people who come in and are surprised that mum and dad, or mum or dad, had squirreled so much away in different accounts and things, and the testator themselves usually has a very low opinion of how much their house is going to be worth.
Yeah.
And they say, oh, well, it's probably worth £150,000, and you think it's a 4-bedroom house in a nice village outside Norwich. No, it's not going to be worth that. It's going to be worth at least double that. And I will quite often look online for something comparable, but just as an example to them to say, look, this is actually more what you're thinking about.
But I suppose as well, it's the generation that they were in, that they were quite frugal. They didn't waste money. They didn't spend things unnecessarily. They did save, so that's why they have got so much to pass on. Absolutely.
They didn't spend above their means. They didn't have credit cards. They didn't have the ability to have the credit cards either. Like we've all grown up with that ability to, I'm not going to wait for Christmas for this, I'm just going to buy it. I'm not going to wait to save up for it, I'm just going to get a credit card or a hire purchase agreement. People used to buy things outright. And I think that does come across with the generation of, or the demographic, I suppose, of the clients that I deal with on a daily basis.
Yeah.
Not all. Some are just happy to give it away during their lifetime, and that's very tax efficient as long as you live for the 7 years. But others are more, then they don't want their children to waste it. And also there's a situation where you can get with, if you've got a client or a testator in their 80s, their children could be in their late 50s, early 60s. They could have their own inheritance tax problem themselves. So that's where you do get testators that will sometimes skip a generation, leave it to the grandchildren, which again, I think as long as the children are on board with that during your lifetime, there's no nasty surprises. And actually, that's not a bad way to do it.
Yeah. But it's just involving the whole family in the planning process, really, isn't it? Rather than just assuming that's the right thing to do.
Yes. You can get children that are very interested in their parents' financial planning, as I'm sure you experience as well.
Definitely.
And what they do with their assets and what their will says and things like that. And obviously there's strict rules of client confidentiality, and we obviously have to make sure that the instructions are coming from our clients and not from a well-meaning family member. So, yes, I mean, it is difficult, and I think it all comes back to communication, getting good legal advice, good financial advice, knowing exactly what you've got to leave and how those assets could be used. I certainly always say to my clients, we try and make your will flexible in that you get a grandchild that you didn't expect. You don't need to change your will for that, but you have to think about, this is what you've got today. And we were always told at university and law school, if you get hit by a bus the day after you sign your will, what happens? So we want it to work for that inevitable situation.
So kind of it needs to be what you want as of right now.
But also what will work if this is, you don't look at this for 20 years, in 20 years' time, is it
going to adapt to it, to your changing circumstances?
So I always suggest that people have a look at their wills every couple of years, and any big major events, lives, deaths, births, divorces, inheritance, and their own inheritance or children's inheritance from, other avenues, things like that. It's good to review. Certainly look at it every 5 years and keep an eye on the financial pages in the news, because sometimes legislation comes in very quickly that we don't anticipate. Obviously, we have certain things where it's said, oh, this will take effect as of the new tax year, but sometimes it can come in, like an election, after an election result, and it will just change the law. And so everything you were saying on a Monday could be completely different on the Tuesday. And I have seen instances of that happening in the past.
Making sure that everything's up to date. We've mentioned a few different things about obviously what things you can put in your will and how they can help. But why do you think having a will is so important ultimately?
Because it says where your assets are going to go. If you don't have a will, it will pass under the rules of intestacy, and you may be surprised at where your assets turn out assets pass if you don't have a will. So having a will is your last chance to say what you want to say, and any supporting letter of wishes that goes with it. Even if it's where your granddad's medals go, they will go to beneficiaries that you might not want them to go to if you don't write a will. So, and also one thing that does get overlooked quite often, I get, I don't need a will, I'm not old enough to need a will. Well, I think if the last 2 years in the COVID pandemic has taught us anything, is, and also the war in Ukraine, is that the situation in the world can affect whether you need a will very, very quickly. And, there will be people who did not anticipate dying in their 30s in a war or as a result of COVID, who probably died without leaving a will. And people say, I have nothing to leave. Well, quite a lot of people in that bracket have children. So you can appoint a guardian in your will if you haven't, got a situation where it's not the surviving parent who would look after your children. And I think that's really important, that you give thought to those sorts of things as well, not just your money and your assets. But one of the interesting things that does come up is quite often younger people. When I say younger people, I probably mean people under 50. That keeps me in that bracket as well. Over 18 and under 50 sort of think, I have nothing to leave. They do have quite a lot of that age range will have houses. Whether they own them so they pass to the other co-owner or not is a separate thing. But quite often people have death in service payments that they aren't, they sign up to on their first day, where they've got a whirlwind of paperwork and they just sign something. And do they know where they pass? Do they pass to a person specifically, to a spouse, to children, or do they just form part of your estate on death? And that, do you have life insurance policies that you've taken out as a result of something, and you don't actually know where that money goes when you die? And if that forms into your estate, and your estate is then, it passes along the rules of intestacy, it could end up to that child that you don't want it to pass to, or it could end up to the parent that you've had nothing to do with for 40 years. So it's just important, because actually you then choose. It's choice. It's having the last say, which I quite like, and also it's the choice of where your assets go, rather than somebody who wrote the rules in 1925 says where they should go and amended them 10 years ago.
Yeah. So you've mentioned there the rules of intestacy a few times. I know it's a very lengthy process. I know a lot of people that I've spoken to in the past think that if you haven't made a will, it all goes to the state or something like that. Some ridiculous things. But I just wondered if you could give us a brief little overview of kind of the first few places that it may go if you don't have a will.
Of course. I think I was going to say actually earlier, I think TV plays a massive part on what we think about wills and all of this kind of thing, because people sort of have this, and lawyers to an extent, they think, oh, you just pop up. It's like the lawyer in EastEnders who is always the same lawyer, and it doesn't matter what they're doing. They're fighting a murder charge, they're dying, they're buying a house. It's the same lawyer that does it. And I think the days of that sort of jack of all trades solicitor is probably on the way out. However, with intestacy, I suppose really the first part is, are you married or in a civil partnership? So if you are, then a part of your estate or possibly the whole estate will pass to your spouse. So if you're married and your estate, so that's your assets that are solely yours and don't pass by survivorship to a co-owner, for example, a sharing property, if that is over £270,000 at the moment, it is different as to whether it is under that or depending on whether you have children. So it is quite complicated. So it's like the rules of intestacy, really, who's left, what have you got, and who's left to take it is where we start. So if you're married and you've got no children, everything will pass to your spouse.
Mm-hmm.
So that's quite an easy one. If you are married and you have children, your estate will pass between your spouse and children in the following ways. So the first £270,000 is like a fixed sum, which will pass to your spouse as well as your personal chattels, as we lawyers like to call them. So your personal effects, your jewellery, your cars, your mugs and saucers, all of that kind of
stuff.
All of the things that aren't nailed down in your house, and including vehicles, will pass to your spouse as well. After that £270,000 and the personal effects, your estate is divided into two halves. One half passes to the spouse, absolutely, and the other half passes to your children. If your children are not yet 18, it will be held on statutory trusts until they are. So again, that's another reason that's important to make your will. I keep coming back to the reason. Again, children under intestacy will inherit at 18. And I think there's probably a lot of parents out there who go, God, I don't want my 17-year-old to have money next year. They wouldn't do anything sensible with it. So you can up the age in which your children inherit under a will. Obviously, intestacy is flat. They don't.
18.
Absolutely 18. So if you don't have a spouse and you just have children, then your estate passes equally to your children. So again, linking that into why it's important to have a will. If you might have got a child that you don't have anything to do with for whatever reason, and you don't want that child to inherit under intestacy, make a will, because otherwise, if you don't have a will, it will just be divided between such of your children as survive you, which again can be. People sort of think, well, I haven't seen this person for 25 years. Why would they get anything? And they don't realise.
Yeah.
If you don't have children, it will bounce up to your parents. So again, that might.
And if they're elderly and they might already have inheritance tax problems, if they suddenly inherit a lot of money, then you could just actually be causing problems for somebody else. So.
Absolutely. And then if your parents have both predeceased you, and again, you can have a situation where, and I've certainly seen this quite a few times in my career, is where somebody dies intestate and they haven't had a relationship with their dad, let's just say, for 20 years. And the other parent is quite surprised. Oh, so you mean they're going to get something? Mm-hmm. It's like, yes, they're going to get exactly what you are as the mum in this situation. Right. Okay. Well, I don't know where they are. And that leads on to its own problem. So definitely it is a case of, it will follow the rules. And if you don't like the rules, the only way you can change them is by writing a will. And then obviously, if your parents have predeceased you, then it will go out to your siblings if you have any. If you don't have any, it can go up to your grandparents. And if you don't, your grandparents, probably if your parents have died, so have your grandparents.
Yeah.
And then it can go out to aunts and uncles and
cousins. And
and that's where you end up. Somebody rings you from
Air Hunters
and says, oh, great, Aunt Ena has left you some money. And by the time...
You say that, my aunt and uncle have actually been contacted from someone there before. So I always thought it was a bit of a myth that people didn't really do that. But
it does devolve to the Crown or to the state only after we have exhausted parents, siblings, half-siblings, grandparents, your aunts and uncles, half aunts and uncles, things like that. So that's the other thing, is that there are many layers, and not that many people will die having absolutely nobody left in their family, but they do.
Yeah.
Quite a lot of the time, my experience is if people don't have close relatives, they leave to charity or to friends, things like that, which can. But again, have its own issues.
They've then got the choice to be able to do that by using a will, whereas otherwise they wouldn't.
No, absolutely.
Well, I think we've exhausted the rules of intestacy. I think if anyone needs any more advice on that, they can definitely come and have a chat with you, because you know the ins and outs of everything. But also, their own personal situation, their circumstances, and if they need to make a will, you are definitely the right person to be speaking to. Thank you for joining me today, Louisa. It's been lovely to have you.
Oh, it's been really nice to be here. It's
Your first experience of recording a podcast.
It is, yes. I can safely tick that off the bucket list. And yes, but certainly, I mean, if anybody's got any questions or if you ever want me to come back and do something more specific about an area of law, do let me know.
We'll be in touch. Thank you very much.
Bye-bye.
And with that, we've completed today's episode. We hope you have enjoyed following along with us today and taking another step closer to a financially secure future.
If you've enjoyed today's podcast, you can head over to themoneycompass.co.uk where you can find out more information, hints and tips from today's episode.
If you'd like to get more involved, share your own experiences and learn from a friendly community on a similar journey to you, why not join us in our Facebook group, The Money Compass, where we will support you in navigating your way to financial success.
Thank you for listening and see you next time.